Good morning, Stocktwits Nation. It is Tuesday, September 16th. This is the Daily Rip Live. I'm Katy Perry, joined by Shay Boloor and Tom Bruni. I like that house music this morning. I felt like I was in a fancy elevator or something. What'd you guys
Good way to
think?
wake up. Better than the dancing people, which I haven't seen in a few weeks. So thanks,
Yeah,
Keith and Max, for that.
we got some mixed reviews on those. We had some funny ones when Vaz was on. There was one of her and I in a boxing ring. It looked like we were about to throw down, and then it cut at the last second. So I was happy to hear that. Also, guys, I'm at a co-working space, right? And I got like my half of my office, and then is the studio, and half is like my office, and it's all glass. And I feel like my colleagues are just finding out what I do in here in the mornings, and it's a little awkward because they'll be like, "What are you guys talking about today?" And I'm like, "I don't know." And I'm like looking at one of them right now.
Yeah, I think they're upset you didn't invite them on the show. They're like, you got this podcast and you didn't even invite us.
It's a
What's
lot
going
of
on?
startups. They're like, "Hey, if you're covering SaaS accounting software," I'm like, "No, no, we're not." Yeah. So Shy says
Nice.
SaaS is dead unless you got an agentic angle. You're not
You're a
gonna
rapper. That's it. You're not a product.
show me your moat. Well, Tom, it's good to see you back this week. Give us a little update on what was going down in the community last week. I know you were once again all over the press talking about various things. We got a lot of new things coming on this week, but anything stick out to you from last week?
Yeah, I think just more of the same. People staying aggressive. It's a bull market, looking for different ways to participate. Last week, China was hot. We're seeing a continuation of that this week. I know Jake last week was talking about JD.com and a couple others.
Oh.
Yeah, people are still looking for ways to play this bull market in areas that haven't really moved yet. Uber hit new all-time highs. Lyft is starting to hit multi-year highs. Grab Holdings, which is the Uber of Southeast Asia, is breaking out. So I'm seeing a theme within a lot of these kind of transportation stocks, as well as just Chinese names in general.
Yeah, and Jake, I think made some moves on JD yesterday. He shared out. He's going to be on the show tomorrow morning with Jeremy, the Bash Brothers, as I like to call them. So they'll be doing their thing. We also had some big news out of Stocktwits yesterday. So we have actually a new prediction market tie-up with Polymarket and Stocktwits. Basically, what's going to happen is we're going to embed real-time markets directly into our platform. So starting with continuously priced earnings forecasts, you'll be able to see collective market expectations for company results without leaving the platform. Tom, can you tell us a little bit about this? How should our community think about this new partnership and potentially use it as part of their experience on Stocktwits?
Yeah, for sure. This is the next kind of evolution of real-time market sentiment. Obviously, we're known for being able to quantify where attention is flowing and how people feel about particular assets. And we're just building on that with the prediction markets, right? If you're bullish or bearish on a stock ahead of earnings, right, you're betting on kind of the stock reaction. These prediction markets allow you to bet on the earnings itself. So it's very similar to, a binary option where it's like they either beat or they don't. And that's what you're betting on. So it provides an interesting kind of unique way to play a company's earnings as opposed to playing the stock price after the earnings. So this is just the start. This is the largest deal we've ever done in Stocktwits history. It's a monumental moment for kind of our company in the industry, and we're super excited about having Polymarket as our official prediction market partner. I'm excited to see what we build and all we've got coming down the pike. But yeah, we're going to start with earnings, and that'll be an extra lens into how people are feeling about particular stocks ahead of their earnings, companies ahead of their earnings.
Yeah, it's definitely a major move, as you like to say, a sign of the times.
Yeah.
How so I'm not an options trader. How is this different than options? Like why would you do something like this versus do the standard options trade ahead of an earnings call?
Yeah, great question. So you're betting with the event contract through Polymarket, you're betting on the earnings. So it's like, okay, earnings expectations are a dollar. The company either beats it and gets 101 or above, and great, you selected yes and you win, or it's below a dollar and you lose. So it's very binary.
Mhm.
There's no extra layer that you're adding to it, right? If you're trading the options market or trading common shares, right, you're betting on not only what the earnings are, but you're betting on what the reaction to the earnings are going to be. And so you're
Mm,
removing that element of kind of like what's baked into the market already, and you're just betting on what is going to happen with the company's actual results.
very cool. A whole new layer to the experience. So super exciting. And speaking of earnings, let's talk about Trump's
Well,
comments. Oh, go ahead,
before I
Shay.
get to that, I do want to say, like, I do have a partnership with Polymarket, and I speak to them all the time. Like, this is a big announcement on what they announced this week as well on earnings. They're gonna have, like, you're able to directly see what the sentiment is going to be for each earnings reports. I forgot what the specific announcement was that yesterday made. They made a ton of announcements yesterday, I
Yeah.
guess, but position that's going to be so vital on what the positioning is before it prints to see what the expectations are, because clearly the more earning cycles that a lot of these retail investors are part of, they see that can't just beat and raise. You have to do something even more if a stock has ran up, or they're also confused, like, they missed, but they barely beat, but why are they catching a bid when this other company beat that 10 or 15% and got it up and they're down? Like, why is that? Positioning, sentiment, there's a lot of things that's
Yeah.
factored into it. And going off of what Tom's saying, I never play earnings options via earnings. Never. I don't know what the chances are on, like, the odds of success, but it's got to be low, because the contracts are priced with something called an implied volatility, and the option market increases that IV during a major catalytic event. Earnings are a catalytic event, so the IVs spiked 2 to 3x more than usual, probably, than what the standard mean is. So if you're betting that Intel will go up, sure, but the implied volatility is probably factoring a 6% move in either direction. So it has to probably beat by more
Mm,
than 6%. And a lot of times that's where you see option sellers are the real winners during earnings cycle, because typically they stay within that sandbox of how much they should move. And the usually retail gets squeezed out because they were right on the direction, but it moved 2% and not 6%. And they're down 80% on their option contract.
Yeah,
yeah.
it's the most expensive time to buy options, and so, you have the event, and then all of that premium gets wiped away. So unless the
Mhm.
stock really moves, you're not making a whole lot of money. The other news that came out yesterday was just around the Trump administration tightening the window or kind of widening the window for earnings, companies reporting earnings from quarterly to 6 months. Now, I don't know if this will happen, won't happen, whatever, but I think this is a major disadvantage for retail, because if
Huge
you're an
disadvantage.
institution, you can call up the company anytime
Yeah.
you want. You can say, hey, what's going on? Blah, blah, blah. It'll also, in my view, increase volatility, because instead of having a compressed period where it's like, okay, we're 3 weeks out from the end of the quarter, we'll wait to announce it then as part of our quarterly release. You're going to have a lot more 8K filings, because you have to, as a company, if there's a material change, you have to announce that in some way, shape, or form. And so you can't just wait 6 months with no news and then dump everything at once. You're going to have periodic announcements throughout the quarter, which I
Mhm.
think will be a negative because you're getting part of the picture instead of the full
Yeah.
picture. And it also increases the gray area, right? Like what's material? That really depends on who you ask. So, some companies will be kind of aggressive in terms of how they use those, some will be conservative. And so it just creates a lot of uncertainty. And in the event that this does happen, prediction markets will become even more important as a signal because people are going to be looking, where are people betting? Where's the smart money, betting this is going to end up? What do they know that I don't? It's just going to kind of blur the lines and make people rely on kind of this, real time money focused prediction as opposed to like real concrete information that they would get from the companies otherwise.
It's idiotic. If this goes through, this is such a detrimental part of investing for investors now because you're opting to be even more in the dark than you are typically if they report 4 times a year. So you guys hear me talking all the time for growth investing, small cap investing. It's like the house is on fire. So now typically all the lights in the room are at least on, so you can try to figure out how to get to the front door, aka success. Now they're saying, all right, there's 4 rooms. We're gonna turn off the lights in 2 of the rooms. You figure out the way to get from this room to that room to get from point A to point B to the front door. It's harder. It's more difficult.
Yeah.
You're operating more in the dark and vagueness. And again, a lot of these companies are speculative names that aren't profitable. So like now, when there's supposed to be some kind of cash, when you're trying to factor in cash burn on solvency risk for a lot of these companies, like it's incredibly difficult to do cash burn analysis when you have an update twice a year. Cause like there's a lot of capex spend that could be bumped up. Now, all of a sudden, like you thought you had 12-month cash runway, 18-month. Now in 6 months, you see, oh, whoa, it's only extra.
Yeah.
It's probably less than before they have to report their earnings in a couple months. Like that's dangerous. It's really super dangerous. I really hope this doesn't happen. And if it does, we are entering a new derivative of investing that's weighted more towards degeneracy. And I really hope that is not the case.
Yeah. And for
Yeah. Put
oh, go ahead,
Sorry,
Tom.
last thing, putting my CPA hat on, right? Like the key part of financial reporting is the whole point of it is to help people make decisions around, am I investing? Am I regardless of how you interact with a company, you need to know how it's doing so that you can make your own decisions. And I think, sorry, I lost my train of thought. The piece here that is kind of most worrisome for me is like the timeliness and the comparability. This would be a major change, right? Like from a timeliness perspective, great. You've got 6 months instead of 3 months. I would argue that's less helpful than if you got it earlier.
Mhm.
Then from a comparability perspective, think of all the kind of downstream impacts of switching to a 6-month reporting period. Now you've got your first, half of the year is not going to be comparable to the last,
Yeah.
quarterly reports. So all of the data providers in terms of how they compile it, how they distribute it, all the service providers that have a user interface that's based on quarters, like this is going to have a ton of downstream effects that like I don't necessarily think that anyone's thinking of. They're just sitting there thinking about, okay, if you're a company, you don't have to report every quarter. It's
Yeah.
easier for you. It's lower costs. Maybe it's good in high, marginally for small and mid cap companies that don't have huge accounting departments and don't want to spend all the money on accounting and stuff. But I think overall it's a net negative. But we
Yeah.
have no control over what's going to happen or what doesn't. So I think again, people learning the prediction markets, learning about this new sentiment, real-time sentiment indicator is going to be key, because soon you may not have as much information as you once had to kind of navigate the markets.
I mean, that is a massive opportunity for whatever product and platform wants to provide the flashlight, the gap fill on the flashlight. Essentially, like there's less visibility. Who's going to fill that gap for more visibility? And I think you're right. Like there's going to be someone who steps up, and this is a major tailwind catalytic event for them where we'll step up and we'll fill that gap, and we're going to have a massive TAM expansion.
So yeah, that's where two things came to mind for me. One, this rule has been in place since 1970. The UK has the biannual reporting as well, and Singapore. Warren Buffett's even said he supported this in the past. But I think you're right. You lose the granularity. The other piece, though, is now with retail investors being so coveted by these companies, especially the small caps. in the UK, a lot of companies still report quarterly because they see that as an advantage in getting attention on their stock and getting retail investors. So part of me wonders if there might be some sort of push for a lot of these companies to just keep doing it anyway if they want to engage retail. Like thinking of Open Door, can you
Well,
imagine if they just went dark until 2 times? They would never do that given the momentum.
Well, I think there's gonna be a lot of preliminary announcements. I think that's just gonna be the case. Like if you see something that's gonna change and you want to not wait 6 months,
Yeah,
you're gonna prelim. Like for
yeah,
Trade Desk, for example, like they had an awful earnings cycle. You're gonna tell me that they're gonna be in the dark for 6 months and their stocks can continue breaking down for half a year? Because
yeah,
listen, Trade Desk won't pivot until their next earnings cycle, probably next 1, 2, 3. Like they have to prove that the Amazon's not going to keep eating away their market share after that last report. They're going to prelim announcement because they have to break this vicious downtrend.
yeah.
Same with like there's like going to be a lot of situations like that. So I think they're going to find loopholes around it. It's pointless, and I really hope it doesn't
Yeah.
happen.
I also wonder does the lobbying, the brokerage front, your Robinhoods, I mean, that can't be good for them either, right? Like Tom, there's going to
Yeah,
be
I
a
mean,
lot of
less
pushback.
information, less trading, right?
Yeah.
Like
So
if you can't figure out what's going on, chances are you'll kind of sit tight instead of taking your next
yeah,
action. The other piece is like the argument for changing this is like getting executives out of the short term mindset. And to me, 3 6 months is the same thing. Like, what are we talking about here?
yeah,
Like,
that's not
that
that
is
short
short
term.
time.
It's not that. I mean, it's short term, but like 3 months is like a lot happens to I think Tom, you were saying you lose the granularity. Like think of the seasonality trends that could happen quarter to quarter when you
Yeah.
smush those together and you can't parse. Like I don't know.
Yeah,
Um,
I think there are different ways to change, executive compensation structure or other things that you can do without changing the financial reporting aspect,
Mhm.
in order to kind of incentivize long-term thinking. It's one of those things where it's like leadership's either going to do it or they're not, and if they're incentivized to focus on the next quarter, the next month, whatever it is, that's what they're going to do. So
yeah,
I would put it back on the board of directors of these companies and say, okay, this is the game you're playing. You've got the quarterly reporting. How do you do that in a way that both manages your stock price and the reaction to the news you're putting out, as well as kind of the internal workings of your company and making sure everyone is pushing toward, the same long-term future.
yeah. We will see the SEC supposedly independent. So just because they have to prioritize something if the president wants it, but in theory, his take shouldn't have an impact, but we will see. Um,
And by the way, they studied this during his first term, and they came to no conclusion.
oh,
So he's
nice.
basically, now that there's a Republican majority, he's saying, "Hey, look at this again. Wink, wink. Like, by the
Yeah.
way."
I just don't know. I mean, we should move on to the next topic, but I don't know if he wants to piss off the retail trading community. Like these people are rabid. I say that with love to everyone watching, but I don't know if that's an audience he wants to lose. But it
I
could,
mean,
yeah,
it just makes story stocks even more of a story. Like if
yeah,
they don't have to back it up with numbers,
yeah.
like
It's true.
that's the thing. So
It's
I
retail
think
might
true.
actually
he's
like it more.
Yeah,
Some
Yeah,
of
I
them.
think he's thinking more of the corporate donors than he is
yeah.
the average investor. So
Yeah, that's a big surprise. Uh, let's go to let's stick on kind of the changing dynamics of investing because Robinhood had a huge announcement yesterday. So we've been talking about that. I mean, they've been launching all sorts of things. They announced they wanted to sort of tokenize private companies earlier this summer. There was some pushback from private companies there. They actually just filed with the SEC to launch their own ventures fund, which they're calling Robinhood Ventures Fund 1. It'll be the ticker RVI. It is a closed-end fund that's going to let everyday investors buy into the high growth firms that they are investing in before they go public. So this is a $10 trillion private market. As we all know, it's hard to get your hands on private company stocks. You could go through a secondaries platform. You could go through a broker, but it would just not the same level of access for retail investors. And that's what they're trying to solve there. Really curious to see sort of which companies they target. But I'm curious, like Shy, I'll start with you because I know like this isn't you're typically, focused on the public markets, but you do have interest in some of these companies that are staying private. is this something that's of interest to you in a fund sort of format versus directly investing in those companies?
I would directly invest in those companies just because I want a piece of the actual thing. I own
Hmm.
tokenization. Like I don't know for like the Robinhood example. Don't know if I actually own the company or not.
Yeah.
But what Robinhood announced isn't something new. Like SoFi has a similar offering,
Yeah.
but this is the magic of Robinhood. That's what I'm saying. Like they have this like magic wrapper marketing where any kind of announcement they do, it feels like first mover. For it feels like
Hmm.
nobody's doing that because of the
Yeah.
way they communicate their narrative. So like
Yeah.
this, it's nothing special yesterday, in my opinion, because other companies like SoFi already offer it.
Yeah.
And tokenization of private markets is been a thing already, but Robinhood put their name on it and now it looks shiny. So I think
Yeah.
that's again highlights the mode of Robinhood.
The slight nuance I think is SoFi's offering other funds, and this is like Robinhood's fund. So
Yeah,
but
that's true.
to exactly what you're saying, they have that brand cachet where like a Robinhood stamp of approval on a fund might feel differently than something
Well,
else.
I also think that it's going to kick the can down the road on companies not just going public, like real
Yeah.
great companies. I'm not talking fintech wrappers. I'm talking like Databricks. I'm talking about SpaceX, like um Anduril. Like these are and the appetite for these companies are sky high. Everyone wants a piece of them in the public markets. Why have they not gone public? They don't need the money from the public markets.
Yeah.
Elon Elon could raise funds like in his sleep. Databricks, they keep like every 6 months, their valuation goes up 60%. When you're seeing Snowflake essentially get penalized due to the margins, Databricks doesn't have to worry about margins in the private markets. All they have to focus on top line growth and customer growth. Anduril, like they're raising money like it's not, like doubling their valuation every 6 months. Like I think that there's no point on having that public market headache anymore if you can raise funds at the pace they're doing in the private markets.
Yeah. Tom, what are you hearing from or what are you seeing from the community? I know like, focus is obviously crypto, public stocks. But we on this show we bring up some of these larger companies that Shy brought up that are still private. Do you think this is going to continue to be an area of interest for retail investors?
Yeah, for sure. I think the initial reaction is this is just another great product launch from Robinhood. So they're excited about Robinhood stock and kind of some of the other brokerages in the space. I think, in general, when we think about retail, they're looking for high growth, high risk, high reward potential opportunities. And this is another kind of version of that, in my opinion, right? They're getting diversified exposure to some of these private companies that they couldn't otherwise access. So, again, similar to kind of the conversation about the 401ks getting access to, alternative investments, I think in a fund structure, it kind of gives you a bit of, I don't want to say protection, but it diversifies you a bit so that you're not taking that single security risk. So I think that's helpful. Overall, yeah, people, when they have companies they're excited about, they'll find a way to invest in it. I would rather it be through Robinhood and something that's clearly disclosed and whatever, than something that might be a little more
Well,
harder to understand through like tokenized stocks or
Hmm.
something. So
so I think there's an interesting anecdotal conversation I had for Robinhood that still has shows how much runway they have. So, my side of the family is very financially literate. My family I just married into, they're more not that. They care about quality. They're complete opposite. So, my little brother, like he wants to start investing for the first time. He is 22 years old, so I guided him exactly what I would do, how to set it up, what companies to invest in, and he finally did it. First time he has a Roth, and we have the conversation in the living room, and the dad super proud of his son, like you made a Roth, like that's great. Tell me about it, and then his son's like, oh yeah, open a Robinhood because Shai said Robinhood, and that was like, you did Robinhood? Why would you do Robinhood? I would trust something better than like Fidelity. Like I don't trust
Whoa.
Robinhood. That's like I think a lot of like that generation. Like I don't know if they'll ever cross that barrier. So like it shows that there is still a lot of runway. We're in this like bubble, maybe for young millennials, Gen
Hmm.
Z, where it's all Robinhood, but like the boomers, like I just they can't cross the psychological threshold. But if they do, whoa.
Yeah.
That's a huge market that they probably don't target that much.
That's a great
Yeah,
point,
I
and just as hard for young people to fathom them switching over to a Schwab en
Yeah,
masse. Go
Yeah,
totally.
I
ahead,
don't
Tom.
know if Robinhood will ever necessarily get that older
Yeah.
client just because they rely so much on like in-person branches and they want to go speak to somebody and get somebody on the phone. So I think there's a level of like customer support and financial advisory they can't yet get with Robinhood, maybe 5 years from now. But yeah, I think going back to kind of the investing in private markets, the last thing I'll say is um, this evolution is going to continue. Eventually, you will be able to, we're going to go from a fund structure to eventually be able to invest in individual, private companies. And then from there, moving down the cap scale and eventually be able to invest in smaller micro cap like earlier stage startups that are looking for public funding. I think that'll end up in everyone's brokerage apps eventually. Obviously, there's a lot of regulatory stuff. There's disclosures. There's just more risk there, and so I think it'll take time to work itself through the system. But yeah, we're in a world where people want access to everything, and they're like, "Listen, I'll figure it out. I kind of understand the risks, and if I get burned on something, that's my responsibility." But yeah, I think this is just a continuation of the trend that we've been seeing over the long term.
Yeah, I think the diversification piece is key. I mean, if you think about a VC, they're putting chips on how many things and hoping one wins. They're doing their diligence, but they know a lot of those are going to fail. So if a retail investor has the ability to do a similar thing, and we've seen in the public markets, retail investors do have the capabilities to do research and learn about these companies. So they'll definitely need more access to information. It goes back to where we sort of kicked off the conversation on just reporting and how the SEC comes into play. But yeah, Robinhood continues to, I think, to Shai's initial point, just really good at selling their story and selling the momentum. Um, Speaking of momentum shifts, though, I want to talk about Alphabet for a second because they just joined one of Wall Street's most exclusive clubs, hitting the $3 trillion market cap. So they're only the fourth US company to do it after Nvidia, Microsoft, and Apple. Quite the turnabout for Google. People were kind of dogging them earlier in the summer. A lot of concerns about the demise, quote unquote, of search, their AI being behind potentially in that space, but their stock surged more than 4% after this favorable antitrust ruling from I think it was last week, 2 weeks before. And so they've kind of had a turnaround a bit in terms of the narrative around them following this antitrust decision. We talked a little bit yesterday, Shy, about Google's advantage on the TPU front. And when I was reflecting on it, I feel like we could probably explain a little better what the TPU versus the GPU is, but I want to kind of revisit that quickly. And then Tom, get your take on we've been talking about some of these Mag 7 stocks. What's the community feeling about this one? But Shai, real quick on that note you made about sort of this full stack, can you quickly describe kind of TPU versus GPU, how to think about that?
Well, first off, I just want to. Google is going to be one of my badge of honor stocks. I love it because like I went on national TV during my media circuit. I think it was at 160. I was claiming this is what Nvidia was going through in 2022 is what Google is going through this year, and that's going to change. They're not a search company. I think that the market for AI for them is going to be far greater than information retrieval that's happening right now for search. Like it's going to be substantially higher, and that their tech stack is dominant. Nobody else has as a controlled vertical stack as Google does. And the TPU front, now we can go back to the TPU front. Like it is massive. So the difference between TPU and GPU. So graphic processing unit, GPU, everyone knows them as NVIDIA. The NVIDIA is the AI GPU engine. So they dominate the space. And they also, with the H100, Blackwell, Rubin, I will always forget the one after Rubin. It's some different name. It's like an actual name. But they dominate that space, and they also have all this ecosystem around it. So like think of GPUs as somewhat of this like general purpose heavy machinery where it's great at a lot of different compute tasks, including the AI training and inference. So the way TPUs are different, I think it's tensor processing units.
Yep.
Don't quote me on that. It is okay.
That's
Yeah,
right.
don't
Yep.
quote me on that. It's in-house design, so it's a custom silicon chip for Google, where it's tied specifically for AI machine learning workloads, so deep learning. So when you think of Google for specifically TPUs, deep mind. So the tensor, the first part of that word, I do think it refers to like how the data structure is going to be used in their neural networks. So like for the custom accelerators, for all the framework that they're going to use on these massive workloads. They're way less flexible than GPUs, but that's the point of it. They're more efficient at certain AI jobs. So they're more efficient at the training and inference that Google actually needs it for.
Yeah.
So GPUs is very good at a lot of different things that's super vague. But if you want specific things that are operationally beneficial for yourself, like aka Google, like you know what you need from these chips, you can tailor the TPUs are tailored to benefit that. Not just
Yeah.
really good at a lot of different, like the master of none. Now there's a master of what you actually need. So I do
Yeah.
think it's a massive advantage for Google Cloud. I do believe it's a differentiator that they can rent out to customers if they want. Like I think there was some news when I was out that there might be some smaller cloud plays that might buy their TPU. So now all of a
Oh.
sudden the supply and demand for chips might start evening out more if like the TPUs hit the market. So GPUs are still by the standard, like they're going to be the standard. But I do believe that right now maybe GPUs have 90+% of the market. That might go down to 80%. They're still dominant, but that delta that the custom silicon chip market might get, we're talking $1 trillion market. So like that's a hundreds of billions of dollars now all of a sudden going towards these custom silicon chips. It's massive. So I do think that hopefully that described what the difference is
Yeah.
and why Google is at such an advantage where it took them 7 generations to get to this level on TPUs. Trainium is the closest thing. They're a couple years behind. Microsoft hasn't even gone started really. And
Wow.
you've seen the issue they've had on launching it. And Meta is just like, they're still buying off the shelves. Like they're so far ahead of all competitors, and I think they're getting re-rated now on their chip quality, which is why Gemini is such a chef's kiss compared to all other models because they have the best in-house chip that can tailor exactly what Gemini needs to benefit from.
Yeah, that's super helpful. And you answered
Ooh,
one of the questions
Jumia is
that
up 20%.
Jumia.
Whoa, Jumia.
Oh my god, you want to go to Jumia?
No, we can. I want to hear Tom's. If you want to
Okay.
go to Tom.
Yeah, I was just gonna. I was say before we go to Tom, like that's helpful because yeah, it makes a lot of sense that they would be more rigid in what they can do because they're custom built for Google. And then I was going to ask, well, does anyone else want these? And maybe they'll build around that. It sounds like they do. So that's interesting. Tom, what thoughts on your end on Google? What's the sentiment check over there for those guys?
Yeah, I mean, nothing changes sentiment like price. That's a saying for a reason. People are generally bullish, but I mean, the stock's up 80% since the March lows. So there's kind of this feeling of if I haven't bought it yet, I'm probably not going to buy it here. Maybe
Mhm.
wait for a pullback. There's a bit of a whack-a-mole situation happening with the Mag 7 stocks, right? Like they kind of all take turns moving. I think Amazon, Microsoft, Apple are kind of not doing all that much. Tesla's been one that hasn't done much, but broke out last week. That's kind of the focus of where I'm seeing people trade the Mag 7 this week. If I can, I'll share my screen. Or Keith, if you could just pull up Tesla. There's this level around the 2021 highs around 400 that people are looking at. And, if prices can get sustainably above that, people are betting that this is the start of the next leg for Tesla. And, obviously Elon Musk buying shares is a kind of a sign of confidence or vote of confidence. But it seems that in a lower rate, more sustained growth environment, people are betting on Tesla and its next kind of robotics, AI, yada yada thesis
Mhm.
being coming to fruition. So yeah, Tesla is the Mag 7 name that people care about right now.
Yeah, we did a deep dive on that one yesterday. So if you guys missed that, you can check it out on YouTube. Shy, I'm sure you're chomping at the bit to talk about Jumia. I saw it's trending on Stocktwits. You brought this one up before, Amazon of Africa. Uh, what's going on? What's going on with them today? What are we looking at here?
The market, the street specifically, is waking up to Jumia's story. Is what I think, because I think there's one, maybe two analysts that actually covered the stock in the past couple years. So clearly, there was me sticking my finger in the air and like what's betting on what's happening on Jumia, reading between lines on the management on like what's actually happening in their story, because this was such a polarizing stock. Like if you look at their chart, if you go in the past like 5 years, it's not pretty. It was the
Mm,
darling of the COVID bubble, went to
yeah,
60, went all the way down to $2. Rarely does a stock go down 90+% and actually start recovering. But
yeah.
Jumia is really different because the Africa is the wild, wild west. Like it really is not a typical like nation where for an e-commerce presence, like it's like the eastern part of the world, it's like Europe, it's very different. There's no numbers on addresses. Like it's so difficult logistically to actually have a presence in this area. So what's been penalizing Jumia has been the solvency risk with the currency exchange issue. And I've been tracking their cash burn, I've been tracking their GDP growth. There's been a lot of like pivots on the corporate strategy front, but I started seeing signs of actual improvement 2 years ago. I was like, I'm going in on Jumia. Like, it's too great of an opportunity. Like, this is the highest growing region in the world
Mm-hmm.
for the next couple of decades. And this company is the only one that has a major presence logistically for it, and it's worth less than $500 million. All I have to do is track the solvency risk, GDP growth, and if it survives long enough, it's going to get a re-rating. They're not just surviving anymore. I think last quarter they delivered a type of earnings that changed the story, and it's going to have to catch a lot of like by the institutional eyeballs, because for 2 years management, like I've been saying, has been promising a story. They're going to cut costs, they're going to scale responsibility, aka GDP growth, and they're going to try to break even without raising capital. Well, this recent earnings cycle backed that narrative up with real numbers. Revenue went up 25% year over year. The gross monthly GMV accelerated again in July. I think guidance was also raised across the board. And then the biggest part was management reaffirmed break even by next year with profitability coming in 2027. No new capital required. And I think that statement alone reframes the whole risk profile and explains why the stock has been on a nonstop bender since their earnings report, because it feels like this time the execution is going to be different, because Nigeria is what their bread and butter is going to be. It's still massively unpenetrated. I think they're compounding GMV at a 36% clip in that region alone, and it's going to become the engine for that whole business. And I do think that Jumia delivery, like I said, they're the only logistical presence in the whole area, is going to start rolling out a lot more aggressively across different countries in Africa. And what's discounted is, what are you seeing with Amazon? What are you seeing with Mercado Libre? Ads. Ad partnerships are going to be a massive, massive component of any e-commerce platform. And those are high margins, 75% plus margins that you can just add to help with the bottom line. And I think now they're at the scalability of their whole platform where they can start these ad partnerships. And that's exactly what they're doing. And it's been
Yeah.
highly underutilized for years. And now it's getting flip of a switch, it's getting turned on. And now cash burn has dropped to, I think, $8 million before it's going about to be flip positive. So I do think like it took years for my thesis to play out. My cost basis is under $3 because I was able to build out quarter after quarter. Like solvency risk seems fine to me, and now it's my second biggest position. I don't think I'm going to trim at all, because when you have like Macy's, I know everyone thinks about Macy's and Best Buy as like dying brick and mortars, but like they're using Jumia for ads. So I think like
Mm.
they're going to be more of this like ad angle where this isn't going to be just a stock under $10. Like if they survive and actually turn profitability, this will be substantially higher. And I think now they got an analyst upgrade this morning that
Mhm.
said a $15 price target. Listen, there's only two analysts that cover the stock. Like there's
Yeah.
going to be more. And when they see the story, there's going to be more coverage and more coverage, more upgrades, hopefully, crossing the fingers. And it's great to see. That's why conviction is so important with your own research, guys. Like,
Yeah.
it's like what Tom was mentioning. The narrative follows the price action. Like, it was not easy to be like the schmuck that stuck his neck out on Jumia. And like, I still see it. I don't know, guys. Like, the stock's not
What Shy?
reacting to what I see.
What price did you get in at a couple years ago?
My cost basis right now for Jumia is $3.19,
Okay.
and I have yeah, it's a
So,
13%
not too
position now
far
for
off
me.
the low. And then quickly on this one is you mentioned Mercado Libre, Amazon. Why is it that they're not trying to expand in this fast growing market? Is it that this is so different than the other places that they're in? There's too much friction there for them to sort of figure it out, or they're just focused elsewhere.
No,
I guess who could
it's a
take
lot.
Jumia on?
I thought Pinduoduo might have to
Uh,
maybe Alibaba. It's gonna be somewhere like in the China region that would try to
Okay.
capitalize on that. But the reason Amazon, Mercado Libre can't don't want, it's a headache. Like, it's a massive headache. It's not just like you invest in a logistics fulfillment center and then it's all you have to do to essentially fulfill deliveries in that area. Like, you have to have like actual people who familiarize in the area, figure out how to deliver from point A to point B. Because again, there's no addresses at all. There isn't an address that you can deliver to with numbers. It's so difficult.
Some places in Africa have addresses.
Oh,
I
no, no,
think.
no, no. I'm saying the majority, though.
Oh,
Like,
yeah,
most
yeah,
of it. It's
yeah.
very difficult. And you hear the management talking about that as well, where it's a lot of regional expertise that takes years and years to
Yeah.
get to know, to truly understand how it operates. And if you're a major conglomerate like Amazon, Mercado Libre, like, why not just partner than just actually try to solve
Yeah.
and do it yourself? Because that's wasted capital. And right now, all money, working capital, R&D is going towards AI efficiency and margin levers. Like, this is the complete opposite. And I think that maybe eventually, once the area matures, like, you're right, that might be the case. But by then, hopefully Jumia just becomes this
Right.
like bigger
They'll have
player.
an early advantage.
Yeah.
Yeah, interesting stuff. They're of course trending on Stocktwits this morning. I'm also seeing Dave and Buster's there. Good old Dave and Buster's. I haven't been to one of those in a while, and apparently no one else has either because they just announced earnings. They're feeling the squeeze. They label themselves as an entertainment chain, and that's the ticker Play, which is a great ticker. But they're reporting a 3% drop in same store sales last quarter. Net income sliding to 11.4 million. It was 40 million a year ago. They have a new CEO who literally just got there in July. He says he's focusing on the culture, cash flow, getting back to growth. This is one of those ones you watch and you see maybe a little bit of, it's kind of like retail. And I think, Tom, you've brought up before, retail's hit or miss. It has to do with tastes and preferences. But things like this can also be indicative of just consumers' willingness to spend money on discretionary things. They were sort of getting memed earlier this year. If you guys remember, their shares were up 500% on a lot of retail investor hype, but there's still a lot of concerns there. And today they're feeling the pressure on that one. Dave and Buster's, I forgot they were sort of getting memed earlier, Tom. I haven't heard of these guys in a while. They haven't trended recently, have they? This is sort of a new development.
Yeah, it's typically just around earnings. I
Yeah.
mean, the stories, I don't know. It's just they've got some problems to fix, and clearly the stock price is reflecting that. So I don't know. Maybe they improve the prices you get for tickets or something. But
Yeah.
I don't know. Last time I was there, it was, I don't know, years ago, but it was hella expensive.
Yeah.
There's much better things to do than sit around at Dave and Buster's. So I don't know. Maybe
Would
they'll
you
figure it
rather
out. Maybe they don't.
invest in Dave and Buster's or GameStop?
GameStop, just because I think
Wow.
their balance sheet and their kind of like structure of where they're at is in a really good position. So if they can just figure out how to grow their revenue sustainably, they'll be in a pretty good spot. Again, I'm not a GameStop hater. I think the
Yeah.
company's in a great spot. I just think, for the last 2 or 3 years, they've been sitting around just kind of twiddling their thumbs, figuring out what the next move is. And again, yeah, their market cap's I think 11 billion, and they have 6 billion in cash. So like, there's kind of a floor
Just
there.
chilling.
Yeah,
They're
but
just
yeah.
chilling.
GameStop over Dave and Buster's for sure. And I think
Interesting.
the momentum is clearly on your side there as
Maybe
well.
they should merge. I don't know. Let, let's turn to companies with maybe some more promise in terms of where they're at in the journey, what they're up to. Because Fortune announced the Future 50 list. Shy, I don't know if you caught this, but it kind of read like it looked like your portfolio. So
Very interesting
Boston.
because they feature me a lot. I'm wondering if they give me a credit
Oh
for
my.
that.
Okay, yeah. Because okay, I'm gonna read them out. So Boston Consulting Group and Fortune, they do this annual thing where they screen the world's biggest companies. Some are private, some are public, and they determine which have the likeliest propensity to grow. And they call this metric corporate virality. So they're looking at people who are on the radar, but potentially about to break out even more. The ranking goes like this for this year. Number one is Snowflake. That's a Shy favorite.
Whoa.
Number two is Databricks, another one we talk
Whoa.
about. Number three is Solonis, not sure what they do. Four, Data Robot. Five, Astera Labs, another one of your picks, Shy. Six is HubSpot. This one seemed a little out of sorts for me. Seven is Samsara, the IoT company. Eight is
Oh.
IonQ.
Wow. So
And
4 of the top 8.
yeah.
Interesting.
And then they have Wave Technologies and Netscope. So take these as you will. A lot of smart people work on them, and apparently they maybe were inspired by Shy. But I thought that was interesting. I was reading this and I was like, did Shy do this? Like, if
It's
it
very
wasn't for like
interesting.
HubSpot, I would have been like, oh, Shy, you're ghostwriting for Fortune on the side, perhaps.
No, I mean, listen, the theme of that whole list is data, clearly. So
Mhm.
I think it's smart because data is going to get so berserk. Like whoever owns actually high quality data or the rails for data is just going to, or the toll booths is going to be printing cash. Like we're going into a utilization economy. What I mean by that is like whoever can like turn AI workloads into actual revenue is going to be just get this massive re-rating. And I think that you're seeing Astera Labs being that on the networking front. You're seeing Snowflake clearly going from data warehouse to AI data platform. Databricks is the better version of Snowflake, in my opinion. But same tomato. Yeah, I mean, I think it's great. The AI economy is expanding, so it's what you
Yeah.
want to see.
This last one on the list, Netscope, they filed late August an S1 to plans to IPO. They do cloud security solutions, so exactly in the theme you described, Shy. And I guess also a testament to just the continued sort of momentum we're seeing with IPOs, still less than some of the more aggressive years, but we obviously had Klarna. Gemini, I think IPO'd yesterday. That was an interesting one. They're a crypto brokerage that, if you guys were following sort of the rise and fall of crypto in the last few years, the ups and the downs, they had a down period. Like Gemini was like, I think they were sued. They lost a lot of employees, and that's one where I was like, damn, like okay, Winklevoss redemption arc is real, and they're out there and they're lining up with a lot of trends that investors like right now, which it seems like you have the crypto DeFi angle and you have the brokerage angle. And Tom, was there a lot of buzz around Gemini going public among people in the community? I'm curious how people. We talked a little bit about people looking at things like SoFi and eToro, thinking, "Okay, I missed Robinhood. What's the next?" I wonder if there's a similar sort of play that people are trying to make with Gemini and a Coinbase.
Yeah, I think potentially, obviously, all of the brokerage businesses right now are doing quite well across crypto and TradFi. I think the price action tells a bit of a different story. Obviously, it priced well, but then it closed down on, the first day, and really hasn't been able to find its footing yet. So I think in a lot of cases, when there's not this kind of initial momentum out of the gate, people take a wait and see approach, and maybe wait for the first quarterly report and kind of get a view on how the business is doing as a public company before jumping in, because clearly not a ton of momentum right now. So people are sticking with the winners in the space and keeping an eye on Gemini instead.
Right. Well, lots going on over in the IPO market. We've also following this ongoing TikTok drama. Looks like some new details leaking out. So there's going to be some new investors involved with ByteDance. Oracle is reportedly going to keep the cloud agreement. Again, this is all just sources say status. We'll wait for more information. As we talked about yesterday, this seems like the one thing they could probably figure out with China right now. So they figured they'll just put a nice bow on this, make the kids happy, make the get ready with me crowd happy, and move on from there. We also have Meta Connect taking place. So this is I think we're really in an era of like major corporate events. And I feel like it used to just feel like Apple and then Nvidia. And now like everyone, like I was in SF a few weeks ago and
Retail
like,
investing. That's why.
yeah. But like HubSpot, the HubSpot conference was like just like dudes who love marketing on scooters all over San Francisco, and I'm sure that's kind of the norm. But there were so many people there, and then you think of like Dreamforce, and they get like the Rolling Stones or whoever they get. Every company now is doing these big events. We just saw one from Robinhood. Meta's done them before, but this is the one that they're kind of focused on their AI powered smart glasses. And Shy, then I saw this, I thought of kind of like the physical AI theme that you continue to talk about of like the hardware plus the software. So I'm looking at a picture of Mark Zuckerberg right now. I'll send it to our producer, but he kind of looks like Roy Orbison, which is if anyone gets that reference, like congratulations. He was a singer in like the 60s. But these glasses, I'm seeing more and more people wearing these. They have the Ray-Ban deal. Uh, I guess Shy on the physical AI, do you think the wearable has been tried a lot of times? Is there a certain company that you think is best positioned to sort of be the dominant force in these wearables? And I guess the other thing too is we had the OpenAI news on their hardware piece, which is not, the glasses. The glasses have been done a lot. So I'm curious what you make of these types of things. Is it kind of a gimmicky way for them to show their AI prowess, or is there actual potential for these types of things?
There's definitely potential. I think they're trying to get into. I mean, first off, guys, like this is going to be a massive ad revenue lever to pull for Meta. Like eventually, once it scales, like it's going to be bonkers. That's why I don't think it's. I don't see it. I just don't see like the way that the world's trending towards. People want to be more and more present in reality. I know that there was a form of escapism that happened during COVID that I think that's when AR and VR just really started taking off on like investment spend. But like I just think the younger generations, I'm speaking like I speak with them because of my new family. Like you'd be surprised of how like anti-technology they are. For
Yeah.
example, my 15-year-old new sister, like she will not use AI tools because she knows what it does to the grid. She's like, I don't want to hurt the
Oh
grid for
man.
the world. But like I think that that generation is so conscious of like being present, being reality, not doing so many tech forward things that it's kind of breaking this trend of every new generation wants more and more tech. And I just think for those wearables, like it looks cool, but I don't think it's a ChatGPT moment like what
Yeah.
ChatGPT did for AI. And I think that targeting B2C and wearables is the wrong move. I think B2B has to be the first wave. I think that if you do something for enterprises that makes the adoption more day to day, that's the way to like really accelerate the consumers potentially. But for consumers, like the wallet's still tight. People just don't feel like they need to do it, and the younger generations just don't feel the urgency to escape as much as like young millennials did when we started adopting technology. That's just my take on it, though.
Yeah, I mean, the ads piece is if you think the ads are following you around now, I'm just like,
It's
you
gonna be
picture the
crazy.
geolocation capable. You're walking down the street and some bars like, come in and get a free whatever. Like, it's too much. I will
Well,
say we're already almost there though. People just have their phones in their phones in their faces at all times, can't even like walk. So like we're basically there. I think they're just removing the need to hold it.
well, I think the way to do this is what I would do for accelerating adopters, sport fans. Meta partnered up with NFL. One of the referees wears a Meta glasses. Now all of a sudden you can subscribe to something where you watch the game in the eyes of a
Oh,
referee,
that's
or
cool.
and like you're right in the center of it. Same with the NBA. Same like that's like an experience
Yeah.
where I'm like paying for a ticket, or it could be even for boxing. The guy who's in the middle
Oh my
with
God.
the ref. Like, imagine if he was just wearing glasses. Like, that's insane. So I think it's like what you're seeing with the sphere right now in Vegas. That is, you're seeing there's an appetite for experience elevation. I think for wearables, there's going to be an experience elevation for sports. That's where I think they should be pulling a lot of their eggs in, not in like
Yeah.
the Joe Schmo is going to do the Grove to go to go like walk to go grocery stores and like, oh, you can see that. It's not that.
Yeah,
It's
scanning for
experience
gluten
elevation. Yeah.
content in
No.
products at the store. Tom, would
No.
you
Yeah.
rock those glasses? I can kind of see it.
No, probably
But
not. But I think it comes down to like use case and like what the apps are and stuff, right? Like it's just
yeah,
not it's still very gimmicky, right? Like it doesn't
yeah.
solve anything for me. It's just another fun thing. And at that price point, I think it's still like 300-400 bucks. You know, it's tough to make that case. With that being said, I know they are being a bit more aggressive with kind of distribution. My fiance signed her family up for Verizon or something, and they gave her a free pair of Meta glasses. So I have one in my house.
Oh,
I just haven't done anything with it. It's still in the box. We've had it for like
wait,
3 weeks.
it.
So
Can you wear them next week?
yeah, that's a good idea. I will.
Is
Yeah,
it?
I'll do the whole show, and then I'll just see. Like, I'll be watching Netflix in one eye, and then I'll be paying attention to you guys in
Yeah.
the other. But yeah, we'll see. Maybe I could
Some,
live stream what I'm seeing. I don't know.
that's
That'd
what
be
I'm
weird.
thinking. We'll have
So
like a Tom cam. It's
yeah,
going to be really fascinating. Just you looking at a laptop with our faces
yeah,
reflected
exactly.
back. I like the sports angle though. I think that's
Yeah, I
imagine.
think that's
Yeah.
fun. That's again, like Shai's saying, it's an experiential thing where you're getting something that you can't get elsewhere, right?
Yep.
Like if you're just taking what's on my phone and putting it 2 inches from my eyeballs, like I could already do that myself. I do that every night staring at my phone in bed. Like
Yeah.
it's not
That's
good
what I
for me.
mean.
I
We're
shouldn't
already
be doing
like
it
here.
anyway.
You might as well just append it. Pretty soon it'll
Well,
be
Yeah,
like a
exactly.
contact lens like
that's
directly in our face.
it's not even this. Just putting your corporate strategy hat. Again, it's really hard for me to turn it off ever since leaving. But like, why doesn't Zoom go into wearables for college? Like, why isn't like you have like
Yeah.
wearables for college and classes where you just like don't have to be there as much? You actually can have wearables like as a college experience, or like it's not to be college just in general,
Oh,
but
that's
like
so
Zoom.
sad. Like
It's
going
sad,
to
but
like a frat party, but like you're just wearing the
you
glasses,
could
like
be, but like
vibing.
they have to go on like more of a like a vibe product orientation right
Yeah,
now for Zoom
yeah.
because their product's a commodity. Like you have the technology, you have the video. Why not do wearables and do some kind of specific niche? Like that's where the R&D should be going, in my opinion, for like a Zoom
Yeah.
product. But I don't know.
I've noticed anecdotally fewer and fewer meeting links I get are Zoom and more are just Google Meet. I feel like Google Meet made some improvements and people are losing
Well, it's
uh
also free.
yeah, but it goes back to the whole AI point with Google. They just add it in and people start using
Yep.
it.
Yeah,
They
like
have
it syncs with your calendar. They send you the notes afterward, like it's all in one place. If you're in the
Connectivity layer.
Google
Yeah.
suite, like, who
yeah,
cares?
why? Yeah.
Also, I've been getting a lot more Teams links, and I'm really upset about it
Oh
because
my
I don't like
God.
Microsoft Teams. But shout out to whoever's using Teams.
Yeah, I had to use it for something. I do love, I don't know what it is. I like Outlook. I kind of like Outlook. But Teams, no. I have no idea what I'm doing with that at all.
Yeah, Outlook is great. It'll be like, hey, can you find this email from 3 minutes ago? And it'll be like, I've never heard of that. I
Yeah.
don't know what that
I'm
is.
like, oh,
Sorry.
it must not have happened. You know what it is? I like the font that Outlook uses. It's a very specific thing I like about it. I don't know why. I just like
Nice.
it. But I wouldn't opt for it. Well, guys, we got tomorrow's a big day. We got the Fed meeting. See if what everyone thinks is going to happen will happen, but also the commentary that we'll get with it. And tomorrow's also, as I've been talking about multiple times this week, Cracker Barrel earnings. So Tom,
There we go. We'll see if
people,
we can get the memes going. Two
I
other things I want to point out quickly.
yeah,
I'm seeing Chipotle start to trend. They got a new $500 million buyback. The stock is
right,
down 45% from its highs, and it's right back to where it peaked in 2021. So people are looking at
wow,
that as kind of like a value play, maybe looking for a bounce here. And then I'm also seeing crude oil and some energy commodities that have been kind of lackluster for a while starting to perk up. So keep an eye on
right.
those. But yeah, maybe people are buying the Chipotle dip. I don't know. But yeah,
I
keep it
see
on
what
your
you did
radar for
there.
sure.
I see what you did there.
Oh, there we go. Nice. Yeah, I didn't even realize.
Yeah. Well, tomorrow we've got, as I said, the Jays, Jake and Jeremy. Jake will talk about all of his favorite trades, including the China trade. And then Shay, you're back with us on Thursday, right? And we'll recap everything with the Fed. So stay with us this week. Lots going on. Thank you for tuning in. Thank you, Tom and Shay, and we'll see everybody